Hi, I'm Derek Dingle, Chief Content Officer for Black Enterprise. I'm here today in beautiful Martha's Vineyard with Boardroom Chat. Our guest today, Ron Parker. Ron Parker has had an illustrious corporate career, and he is here today as the president of the National Association of Securities Professionals, or NASP. Well, Ron, thank you for joining us.
It's my pleasure. Anything to do with Black Enterprise and you and the Graves family is always an honor.
Yeah, we've known each other for years, and I was going through your experiences. You've had an illustrious 20-year career with PepsiCo, and you rose to Chief Global Diversity and Inclusion Officer there. And then in 2010, you retired, or you said you retired. By 2012, you were the president and CEO of the Executive Leadership Council, which is the preeminent organization focused on black global executives. And then you were there for 6 years, and then by 2019, you became the president and CEO of the National Association of Securities Professionals. Sounds like a very active post-career.
Very much so.
Yeah. So what I'd like you to do is to share with us, one, your role at NASP, that's the acronym, and what is the focus of NASP? It's started in '85, with Maynard Jackson
40 people.
spearheading it, and other investment professionals. I remember that day clearly. But tell me, where is NASP now, and what is the direction that you want to take the organization?
Very good. NASP is in his 38th year as an organization. Matter of fact, it parallels the origination of the Executive Leadership Council, ELC, where I've been a member for almost 40 years as a senior executive and as the former CEO. But NASP is the equivalent of the ELC, but on the capital market side. So you know these individuals very well: Chris Williams, Suzanne Shank, John Rogers, Melanie Hobson. I can go on, but they are the black professionals who are in NASP, and we have about 600 plus members who are part of the association, both in the US and abroad. We have about 150 NASP member firms, and these are leaders, entrepreneurs, black women, women of color, who own their own asset management firms in a very unique area, capital markets. Derek, for the longest, we at PepsiCo were proud during my years there of being a part of the $1 billion roundtable of the Minority Supplier Diversity Council, being one of the few companies to achieve that status in our buying power. But I think we didn't focus as much on the professional services side, where the fees are earned by managing assets of pension funds, retirement funds, public as well as private. And you have people like Chris Williams, Suzanne Shank, John Utendahl, who basically came out of the large asset management firms, BlackRock, Goldman Sachs, Citi, and they created their own firms. So NASP is a composition of all of those firms that either leaders came out of large firms or, like yourself, started right out of college their own asset management firms. And we are focused on a number of things. One, creating policy at the congressional and the regulatory levels of having more minorities manage the large federal retirement funds, public funds, where you have state funds like the state of Illinois, which is our prime example of legislation that basically does a carve out and giving women and minority-owned firms the opportunity to manage those public assets to bring the wonderful returns that they do and to compete with some of the larger asset management firms that are out there.
And so, what is the status of the African American owned asset managers? You talked about the Illinois example, but we know that that's also rare. And then on the corporate side, where we haven't seen as much traction as we'd like as it relates to pension fund management and the like.
Right. Derek, you're absolutely right. I mean, when you look at, let's start with the public funds. The constituents that make up the public funds in these states that are out there, they are black and brown and women who make up the fire, the police. All of those city funds are managed by those public funds of those states. Now let me give you a number to really mull over. There's $80 trillion, let me repeat that, $80 trillion of public funds, large endowments that are out there in the marketplace. Less than 2% of those funds are managed by black-owned and women-owned firms. Less than 2%. And that data, when the funds are getting larger, that percentage of managing those funds has pretty much stayed constant over the last several years. So one of NASP's primary roles is to expose what our member firms are capable of doing, having those funds managed by those organizations so we can go from less than 2% to possibly 2.5%, hopefully within my lifetime. Those are trillions of dollars, billions of dollars that we can add to the marketplace to create more jobs within our communities, to create and support more of those women and minority-owned firms, but more importantly, add to the GDP of this great country. And that's what we're looking to do. But less than 2% of $80 trillion. Another data point. The Knight Foundation did a study of the large major colleges and universities endowments, and they looked at who managed those endowments. We asked 50 universities to submit the names of the diverse asset managers, and only 14 of the 50 universities that we asked, and I'm not going to call any names, would even give us any indication whether or not they had a diverse manager portfolio managing their endowments. Now think about the makeup of the athletes who are part of these major universities, but yet when it comes to managing their endowments, they basically let very few asset managers like Ariel, like William Shank, like Castle Oak participate in that process. Why? Well, there are certain fiduciary thresholds that a board of directors or trustees at universities will basically say, well, a firm has to have X number of millions, billions of dollars under management in order for us to entrust them to manage those funds. So I use a sports analogy, being a sports guy, and I said, well, if you only want 7-footers on your team, then go for the 7-footers. But you're missing out on those players who are 6'5" and under, who can bring unique skills and talents to the game and to this area of endowment management when you're saying, well, you have to be at least 7-footer for us to consider you. So a lot of our member firms aren't at that threshold, so they don't even get considered by the CalPERS, the CalSTRS, the large public state funds because they're not big enough. However, data by the Now Foundation has basically said that those firms either equal or outperform when given the opportunity.
So if you're on the board and your mandate, shareholder performance, you have a fiduciary responsibility to the pension fund, why wouldn't you look at performance rather than size? And how has that argument, if you made that argument, how has that argument been greeted?
Well, not well, since we're still sitting below 2%. But to your point, it is a fiduciary's responsibility to look at all potential opportunities. And when you're looking at innovation, when you're looking at trying to invest in funds that will yield a return of 7, 8, 9% or even higher, you look for those innovative firms to possibly bring new ideas to grow that portfolio so you are able to pay out the retirements of your pensioners. So the point is that if you don't know who they are, you have no relationship with them, you hide behind your fiduciary responsibility will say, I don't know Derek that well. I know Derek is good at what he does. However, as a fiduciary, I can't take that risk. Because if I risk giving those funds to Derek to manage, and he doesn't perform or consistently deliver the returns, then I as a fiduciary am exposed to possibly lose my position as a trustee because I've given it to a unfamiliar fund manager to manage those funds.
Yeah, you talked about Illinois and Chicago, and share with me how traction has been made with, say, the University of Chicago, and why that isn't being used as an example for other universities to follow in terms of the performance and, as you said, the innovation and the drive of the other minority firms.
Sure. Derek, you have people in Chicago, in the State House, that really believes in the benefits and the value of diversity. And when you have leaders who are champions, who are sponsors, who are courageous, they seek out the unfamiliar and they bring it to the table for consideration. When you have leaders like Angela Miller May, who ran the Illinois Retirement Fund, when you have governors who are leading innovative and progressive states like the state of Illinois, I would even say New York Common Fund is another one where you have the comptroller there who is very much a big supporter and sponsor of these diverse and women-owned firms participating in the process, that they bring a level of responsibility as a fiduciary to bring in new insights. We need more of those types of leaders showing sponsorship, showing courage, showing curiosity as to what might be a way of magnifying the fund so that it has a larger payout. And we need those models around the other states that make up the union to participate in this process. But I must say, hats off to people like John and Melanie who are part of that Chicago, Illinois group, James Lowry, Jim Reynolds of Loop Capital, along with others who have created a partnership with those funds to get introduced to opportunities for them to showcase what they're capable of doing.
A lot of the companies you named have been on our BE financial,
Yes.
Financial list, and for good reason. Not only because of their size relative to other firms, but also just in terms of their performance.
Sure. Brown Capital.
Yeah,
being another one.
Yeah, and you mentioned
Yep,
the
Castle Oak.
Yeah. So, wouldn't there be a focus in terms of strategy on appeal to, say, the membership of pension funds? You're saying that overwhelmingly a number of these pension funds are, have African Americans, minorities. On the other hand, there's been a focus on, diversifying, boards. Couldn't that same strategy extend to, the contracting of asset managers?
Yes, great question, Derek. Change starts with governance. Governance is at the top of any entity, board of trustees, board of directors. What you see on the public side and what you're seeing on the private side is what we're trying to do on the public side. So NASP is doing a very intentional job of exposing those very talented, capable leaders to those board opportunities, whether it's at the federal level or the state level. Letting them know that we have talent out there who can represent the perspectives of the communities that they serve. So we look at board composition, but you have to have the transparency of when those positions are coming open, and the curiosity and the leadership to reach into pools of talent that people aren't familiar with. You know this better than anyone, because Black Enterprise does it every year, where they look at the makeup of governing boards, whether it's on the public side or the private sector side. Most of those positions are filled informally. There's an informal network of an existing board member who is connected with other talented leaders, and when those board opportunities present themselves, because we don't know exactly when that cycle is up, those individuals will usually reach out to people they know to possibly be considered for those very select seats. And when that happens, usually you're in a group or a crowd, but you're number 4 or 5 below, and those seats get filled. And then all of a sudden, the governance structure, which helps sets the strategy of those funds, those organizations, from a fiduciary level, doesn't reflect the population that those funds are serving and supporting. So we have a lot of work to do to get those federal pension funds to be representative of the market that they serve. It's very much like consumer-facing organizations. And we have to make sure that we have the talent that is exposed to be considered for those opportunities. But yes, governance is an area that we're focusing in on, but also policy. Policy of the SEC, policy of the SBA, policies of our different funds that are out there, so that at least we get a part of the consideration where it may not go all the way to the area of mandating. We have the intentionality of exposing what the opportunities might be, so some of our member firms can at least have a shot and opportunity to compete with their other peers.
This is a prime opportunity to educate our audience about the value of boards, because ultimately, by having a diverse board that considers who's going to, manage, pensions, 401ks, and how diverse it's going to be, that has an impact on who the manager will be.
Exactly.
And if, a African American manager is selected, or if an African American asset manager is part of the 401k mix, then you help fuel African American business growth, and then that has a ripple effect on our communities and what's up.
Exactly, Gary.
Yeah.
But here's the issue. The issue is that a lot of these large pension funds have and seek out consultants to advise them. And if the consultants are the gatekeepers to gain any relationship with that fund, there are different groups that we have to work with and work through just to get considered. A lot of the funds, like at PepsiCo, Fidelity, one of the largest in the world, was our pension fund manager. We have to then impress upon Fidelity to go out and get consultants to go out and seek diverse asset managers to be in that consideration set. So there's a lot of work that has to be done. Otherwise, you have the audit and risk committee asking questions around, is Derek Dingle's fund familiar with our strategies of how we want to grow our portfolio? Because our data says that we're going to have a lot of retirees that will happen in X particular year. Well, if the consultant says, I know Derek Dingle's fund and they have been in this space, but they haven't been here, Then you have the audit committee and the fiduciaries basically saying, well, that's too much of a risk. Let's let them play at the smaller levels, or let's do a special carve out for them. And Derek, you're still getting fees being paid on a much smaller base. So how can you grow your firm when you're at the smaller fee structure because you're trying to get in to show them what you're doing? Because there's this feeling of being too much of a risk to be exposed to managing that larger sum. It happens at the federal level, it happens at the state level, it happens at the private sector level.
Well, what role does the advocacy have to play? I'll use the example of Black Enterprise. In our 401k offerings, we said that we're going to have a black-owned firm that's going to be a part of the mix, and we're looking for obviously more diverse firms. It was through that voice, largely from our CEO
Sure.
and the investment committee, that we have Ariel as a part of our mix of managers for our 401k plan. How do you encourage that level of aggressiveness or advocacy in terms of bringing a firm like Ariel, which is one of the top performers in the industry, as you mentioned before, to be placed on the set of selections because it's in the interest of your employees
Sure.
and their future, retirement?
David, that's a tough question because see, advocacy starts with an understanding of what the opportunities and risks are. That to me is an aspect of governance, but it's also an aspect of leadership. And when you are familiar with the performance of a firm like Ariel, like Loop, like Castle Oak, and you've seen that level of consistency, to me it's just like sports. We look at the first black quarterback to win a Super Bowl. Doug Williams always had the talent, but never maybe the opportunity. And it took a courageous leader to put him in under center at a time that was most important to demonstrate his capabilities. And when you have organizations like Black Enterprise and leaders like Butch and yourself who are out there, who are exposed to that which maybe others may not be as exposed to, and having your different events that you have throughout the year, your entrepreneurial conference, your Women of Power conference. When we were at PepsiCo, we had the Black Enterprise Golf and Tennis Challenge. It wasn't just to bring black leaders and black entrepreneurs together. We brought non-diverse leaders to see the power of some of these firms that were a part of some of those events. And when you have an advocate who is willing to participate with an organization like NASP, with the private equity organizations like NAIC, who are willing to put money into black banks, like what Nicole Leland is doing, it allows for an awareness to occur. And through awareness, there's relationship building. And through relationships, there's an element of trust. And when I trust someone to manage billions of dollars to help grow it, to pay out on my pension funds for my employees, that's an added benefit to the whole business model that you're trying to do. So what we're trying to do at NASP is to bring more organizations in to get to know our firms, give our firms the opportunity to perform, and the data says when they're given that opportunity, they either equal or outperform their non-diverse counterparts. That, to me, is what, at that time, the Washington football team did with Doug Williams. They had trust in him that he could perform. All we're asking is for the opportunity to play at the Treasury level, at the SEC securities level, and when you have NASDAQ and the New York Stock Exchange with Sharon Bowen, who is now the chair of that board, partnering with organizations like NASP, partnering with other organizations. You are given the opportunity to showcase what you're capable of doing. That's when advocacy translates into performance.
So, well, we have a lot of Doug Williams of finance out there.
Yes, we do.
That deserve an opportunity to perform at the highest level.
Right.
Yeah.
But you mentioned something earlier that I'd like to talk about, is the financial literacy that we're trying to drive through the NASP Institute, where we're trying to get with the HBCUs and impress upon young people of what the career opportunities are in the world of capital markets. And unfortunately with COVID and with internships, some of our historical black colleges didn't have the opportunity to put some of their best and brightest in the capital markets. And what we're trying to do through the Institute is to demystify the capital markets, to understand what it's like to manage a portfolio, to understand what is required with the financial rigor to bring a strategy to a PepsiCo to say, we can give pretty much some assurance that you'll get a 6, 7, 8% return on your investment. We're bringing to the CalPERS and the CalSTRS, these large state funds, new ideas, new areas to invest, a la Africa, where there's opportunity in investing in healthcare, infrastructure, telecommunications, housing. We're looking to work with all these different states who have just received the congressional infrastructure bill funds that are caught up in the state houses, where we can invest in roads and bridges and sewer systems that are in a very latter part of their state where they need to be reinvested, where jobs can be created, but let some of those dollars be managed by fund managers who have relationships, who can bring a McKinsey or a McKersick architectural firm to come in and build a new stadium, build roads, construction. I mean, this thing has a domino effect that goes right into our communities for job creation and to create stability in our neighborhoods when we need it the most, of these young people who are looking to do amazing things, if we just demystify how the capital markets are actually allocated for disbursement within the communities in which we serve.
But to create that avenue of opportunity, you need organizations, corporations, corporate leaderships that are focused on equity. And over the last 3 years, we've had this push for equity to bring down the systemic barriers. In fact, a perfect example is you saw naturally Allstate have a all diverse manager in terms of their bond offering, and we've had developments here and there. Is that moving forward, and do you see those efforts being stymied by, say, the recent Supreme Court ruling on affirmative action?
Great question, Derek. When you take a ruling by the Supreme Court, it appears that now there is a movement to bring that into the private sector with some of these initiatives that you just mentioned. But when you have champion and allies like Bank of America, where our good friend Lionel Knoll is the chair of that board, where they purposely have invested in black-owned banks around the country, made actual deposits. They are now working with those black-owned banks to make sure that the projects in their region are funded, and organizations, especially black women-owned organizations, can apply for that capital to grow their businesses. And we all know the formula is, if middle the middle class grows, then there's stability within a democracy. So the whole idea is to use relationships that we have established over the years by great leaders like Mr. Graves Sr., like you and Butch and others have continued with Black Enterprise, of getting to leaders in the business roundtable and getting to the JP Morgan Chases of the world, getting to the PwCs, the the different banks, Moody's, and invest in these emerging platforms that are owned and operated by Black entrepreneurs, and provide the resources similar to what Suzanne Shank and Chris Williams did, of merging their firms so now 1 + 1 = 5, because they're more able to compete in a much larger arena. To have people like Jim Reynolds making investments in infrastructure that I know Loop Capital is involved in, some growth that's occurring in Missouri and at the different airports.
And
That's what you look
with Magic Johnson.
Exactly.
The infrastructure fund.
With the infrastructure fund, with Magic, having Magic and Melanie participate in the sports and entertainment world by being owners of major teams, and Castle Oak helping to orchestrate different transactions at different universities where there's a large representation of Black athletes. To your point, all we want is equitable opportunities to show what we're capable of doing. The number of trillions of dollars, if we get into a parity of access, is larger than any major country that's out there if we are allowed to participate, and we can add to the overall GDP. And that's all anybody is asking for, Derek, is access to participate in the process.
I'd like to touch on something that you talked about. You've testified before Congress, a few times on diversity within the industry, and there was a focus on the introduction of the Diverse Investment Act to advance that diversity, then work with the SEC to ensure that their guidelines allow for, greater diversity. What is happening with the Investment Act, Diversity Act, Diversity Investment Act, as well as, some of the efforts that you've been doing on the government level?
Right. We've had several of our NASP members who were asked to serve on the Diverse Asset Managers Task Force. Gilbert Garcia, out of Garcia Hamilton, out of Houston, was on that, and used NASP and other resources to gain insights and information as to how transparency and reporting. That committee made, I think, 7 recommendations, and to the credit of the SEC, with some great leadership from the chief leader around diversity, equity, inclusion, Robert Marchman, as well as Pamela Gibbs, who are strategic partners of ours. 2 of those 7 recommendations were adopted by the SEC. Would we have liked for all 7 of them to have been adopted? Yes, but 2 is better than none. And to the chair's credit of the SEC, he has reached out to NASP on several occasions, to the great work that Congressman Cleaver is doing with public universities on their investment strategies and access of diverse asset managers to these endowments. And believe it or not, to some recent legislation that was introduced by Senator Kane to make sure that federal funds have some type of guidelines to be more inclusive. We have all of that momentum. But Derek, at the same time, we have headwinds where legislation that has been built over the last 50 years is being used against us, coming out of the recent Supreme Court, to say these are targeted and intentional acts that should not be looked at and is being discriminatory to those who are not. So we have work to do.
The lawsuit against the Fearless Fund. And you
The
talked about
Fearless
J.P. Morgan Chase. They've been a investor. They've been an investor actually in the Fearless Fund and other corporations. And that's a way to not only attack those organizations, but the flow of investment in those organizations.
But Derek, you know this from your data analysis on the work that Black Enterprise does, as well as the work that AC Nielsen does every year on consumerism. We are a growing consumer base. Diverse consumers, particularly Black consumers. The data says we are the most loyal consumers of any cohort group that's out there. We have close to $2 trillion worth of spending power as a Black consumer group. So the issue is the B2C companies get it. It is the opportunity now, given our dependency on technology and the relationship of the model, B2B models have to get a deeper understanding of the potential of our consumerism. We are the most loyal, we are the most active engagement cohort group of the most recent technology. We have even created our own platforms of Black Twitter, which I think will now be Black X, I guess. When you take that $2 trillion worth of spending power and you amplify that, then you look at it in a global context of the diaspora, you're talking about trillions of dollars being spent around the world within our community of Black global leaders around the world. If you just take the data alone, it should be compelling enough to say, if we want to continue as a world power and really deal with geopolitical issues in a positive way, we are the answer to growth, we're the answer to success, we're the answer to sustainment. The Black Economic Forum that we're doing here in partnership with the Executive Leadership Council and the Sigma Pi Phi Boulé, along with our friends from McKinsey, is all built around 3 platforms. It is our version of Davos, except it has what's Black about it that's woven into the topics. But we're working with Mark Morial, the National Urban League, with Reverend Sharpton and the National Action Network, with Bob Green and NAIC, Robert Rabin's group, and we are going to be working with the CEOs and their leadership teams to say, how might we help you activate the $400 billion that was committed post-George Floyd to climate-related issues, to economic mobility issues, and healthcare concerns. The data says that post-COVID, our lifespan has been reduced by 5 years as an African American community. But if we're going to be fuelers of the economy, we need to change that by making investments in healthcare. And we are looking for Black Enterprise to serve as that convener to continue the conversations. It is one thing to come to an event like this and talk about all of the issues that we're facing. But with the smart people we convened here from some of the most powerful organizations and firms and sectors in the world, we should be able to come with our version of the Marshall Plan that James Lowry and I talk about, and Maurice Cox talk about, Butch talk about so often, that we were taught to convey through our elders, to put a plan together that is going to be driven by us, engaged by us, led by us, but also be the beneficiaries of what comes out of some of these great solutions.
And how are you bringing in more of the more young people to be a part of that driving force?
Derek, you are so right. The young people are the answers to a lot of the issues that we're facing, and we're intentionally getting their voices put into the mix, especially with technology being an enabler to that which we are wanting to do. So we are definitely looking for the voices of the young people. We're also looking for the voices of our historical Black colleges and universities. We're looking for the voices of the entrepreneurs. We're looking for the voices of thought leaders like Butch and yourself. We're looking for the sectors that will help us amplify our story. At the end of the day, we're looking for an authentic partnership across all constituents, because at the end of the day, we think there is value, economic value in diversity, equity, and inclusion.
I just have one last question. As part of our talk on boards, I'd be remiss without sharing your experiences and how you view bringing in more younger people and diversifying the pipeline of directors with more entrepreneurs, more people who aren't from, say the C-suite, so to speak, but who are technologists, because you said it's about innovation in terms of driving us forward. And share with us your experience with Baylor Scott & White Health, which is considered one of the best health organizations in the country, largely due to your board involvement.
Well,
in part due to your board involvement.
Baylor Scott & White is a great business model where I would say to you, Derek, what I'm impressed with the most is the leadership, but more importantly, the curiosity they have around access to good health care, affordable health care. And they are the type of organization where they wanted to get voices on their board and from a governance standpoint that would represent a perspective of the people who are using their health care services. We have intentionally put the patient in the center of everything we do. And as the population changes, that patient composition and demographic changes. So therefore, we are doing some innovative things as it relates to our board composition. And I think with any board, you have to have the principle and the courage to talk about uncomfortable issues. And as our population changes and the people who access our services change, we need to make sure we're showing a degree of regard and respect for who they are. So being on that board, we've created a culture that allows us to talk about challenging and difficult issues. And we reserve judgment until all of the data or most of the data is put on the table. And we use technology, we use insights, we celebrate our accomplishments of good governance, because good governance translates into good organizations. And we go out and recruit some of the best physicians. There's a relationship between our physicians and our nursing staff and that front line that provides the care that you would say is a model for other industries. And it has been very rewarding for me not only to serve on that board, but to listen to other business leaders and medical leaders who are willing to listen to me. And that's a unique culture that you would hope all boards would embrace. Beyond the duty of care, the duty of responsibility, the duty of stewardship that boards require board members to have. And we're curious as heck. We're always looking under rocks, looking for new ways of delivering supreme health care to all of our constituents. And I must add, which you didn't ask about, but I also serve on the advisory council, similar to the one we created with Mr. Graves, where we had the advisory council of some of the most esteemed black leaders and Hispanic leaders when we had the PepsiCo Advisory Council. I would tell you that I serve on 2 advisory councils of 2 well-known brands, and that is the Procter & Gamble organization, which they have a great CEO and great marketing team that's gotten a lot of accolades on their marketing and their outreach and their diversity efforts that are being led. And I've also served on the advisory council of Cardinal Health, which gives me insights of the whole medical distribution side that I can go back and talk to Baylor about and other places. But that's a salute to 2 publicly held companies that their leadership has allowed for diverse voices to be represented in the things they do internally to meet their shareholder needs. So between Baylor, between Cardinal Health, between Procter & Gamble, and I can't leave out my university, Texas Christian University, where I served as the chair of the development committee, where a university that has, a private university that has only about 10,000 students, undergrad, and 2,000 graduate students. I led a campaign where we led and raised $1.1 billion for our endowment. And we have a diverse emerging manager strategy to help manage that endowment, which tells you a little bit about the culture that we've created at the university.
That's the reason why your voice and other voices like yours are so valuable to the organizations you serve and other organizations, so that you can have that diversity of access, and that you can have that innovation that is definitely needed to drive the nation and the world.
Sure.
Well, on behalf of Black Enterprise, I thank you, Ron. And also, I thank you for the amazing work that you've done in terms of driving African American diversity, not only through what you've done with NASP, but throughout your career in your roles at PepsiCo as well as ELC, and your work on the boards that you've just discussed. It's been important work that needs to continue, and I know you're among the people that are helping to make the numbers grow so that we could be even a more impactful force in terms of driving diversity and innovation in this nation and throughout the world.
Thank you, Derek.
Thank you.